In the final targets in focus of this trading week, I'm joined by Vassili Serebriakov, who is a currency strategist for Wells Fargo Foreign Exchange in New York. Vassili is often called upon to give FX analysis to media organisations around the world, but today he's talking especially to Dukascopy TV. So thanks for joining me, Vassili. Let's start with the euro-dollar. Another very eventful week in Europe, but next week Bernanke will speak after the Fed rate meeting. Do you expect Europe to carry on being the main driver of the traders' favourite, or will the US start to take precedent? And where do you see it heading in the short, mid and long term?
I don't think necessarily the focus is going to shift back to the United States. I know there's been some talk of QE3, but I think perhaps even more importantly, we have the European Central Bank meeting next week on Thursday. And I think that potentially could bring a rate cut in terms of the policy rate, the refi rate in Europe, and I think that would be a key event for the euro. So I think it's a little too early to say that we're sort of done with digesting the European announcements. And I do think that the initial market reaction to the announcements that we had this week in Europe is not necessarily a long-lasting one. I mean, certainly we're cautious. There's still a lot of details missing. There's still large implementation risks. And in the end, looking at the Italian bond yields, for example, doesn't suggest that the package was as great as the initial market reaction suggested. The Italian bond yields are back above 6% today. So I think we certainly have not seen the last in terms of European reaction. So in terms of the euro, I think it will be hard to sustain fully the recent rally, and in fact we see levels above 142.50 as a short-term selling opportunity.
On to the dollar-Swiss franc now then. The greenback has been up against the Swissy today after the Swiss KOF leading indicator fell by more than expected. Where do you think this pair is likely to head in the short, mid and long term?
Well, primarily when we talk about the Swiss franc, we like to look at Euro-Swiss, and Euro-Swiss has really been going nowhere since the Swiss National Bank established the floor under the Euro-Swiss cross. So we've been in this 120, 125 range for a while. I don't really think things will change significantly going forward. I think there's natural pressure on the Swiss franc to appreciate as long as those European debt jitters persist, and I think they will very much continue to persist going forward. On the other side, of course, you have the Swiss National Bank protecting the downside. So really, dollar Swiss has mostly to do with the direction in the euro dollar, and as we believe the euro dollar is kind of reaching the limits of its upside at this point. I think a weaker euro would also translate into a weaker Swiss franc eventually. It might take, it's probably not a short-term move necessarily, but I think towards the end of the year we're going to see Swiss franc higher and probably higher than those 0.93 levels, sort of moving closer towards 0.95 by the end of the year for the dollar Swiss.
Finally, on to the dollar CAD then. This pair fell through parity during Thursday's European trading. Is this down to dollar weakness or commodity currency strength? And where do you see this pair heading?
Well, I think it's a little bit of both. Certainly, Canadian dollar is a currency that's very sensitive to risk sentiment, and as we saw a bounce in the equity markets, that helped the Canadian dollar. While we're impressed and positive on the Canadian fundamentals, I think in the short run you still have to look back at Europe and what's happening there for the direction of dollar Canada. So we would prefer to trade a range at this point, probably buying dollar Canada around 97.50 and probably selling dollar Canada around 102.50. I think again the European situation is very far from being solved, so we're a little bit cautious about this significant appreciation in the Canadian dollar at this point. Once we move into next year, and I think once we have a more sustainable increase in risk appetites, I think the stronger Canadian fundamentals will really shine through. We think the Bank of Canada is going to be raising rates again towards the middle of next year, and that's when we're going to see more pronounced and more sustained strength in the Canadian dollar in our view.
Thank you very much for that, and thank you for joining me, Vassili. Targets in Focus will return next week, so as always, stay tuned to Dukascopy TV. Goodbye.